Hi, everybody. It's Jeff Gibby here at MetaStock. I hope you're doing well. Thanks for coming. I hope you enjoy the class today. We have a great presenter. Of course, we're going to start the way we always do with our legal disclaimer. So let's go ahead and get that out of the way. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. All right, so let's talk a little bit about our presenter today. I was thinking about how I could really kind of give Rahul some pretty good credit without going on for a long time. I'm going to say a few things. Rahul has been a dedicated partner of MetaStock, a great reseller, trainer in India. He's been with the company, I think, for just a little bit longer than I've actually been employed here. So I think it's like 24 years, if I remember right. And Rahul has the distinction of actually developing the first trading system I ever traded real money with. He's going to talk about it today. I still use it. And I did have the pleasure this year traveling all over Asia with him. We went to Hong Kong. We went to Singapore. It seems like we went everywhere, but we went to like all these different countries. He did a lot of lessons. He does such a good job. He's such a great presenter. And I think that's where I'm going to kind of introduce him at. So let's go ahead and bring him on the line here. Rahul, how are you?
Great, Jeff. How are you doing?
I'm doing good. How did I do in terms of introducing you?
Well, very well indeed. In fact, the only little bit I'll add to the relevance of today's discussion is, above all, I speak to you as an active trader, someone who trades his own money. And I think that's where you'll hear me off. It's really from a trader to a trader, tools that are more practical, methods that are practical, which you and I can use every day, whether we day trade, whether we invest. So I think, yeah, above all, I think this, forget the whole bit of the experience. I think the idea of today is to get all of you nice and knowledgeable with the RMO. It's such a powerful tool. It's been so popular. I think the idea of today is to kind of give you a hang of the RMO and kind of take you beyond it so that you can actually make the most of it.
Okay. Well, and you do such a good job. I'm really excited about today. So I can't see your screen. I just have a little bit of an audio tweak. I'm I'm going to get out of your way, Rahul. It's your turn.
Thank you, Jeff. Welcome, everybody. And uh, good morning to most of you, and probably good evening for the folks who are in Asia or the eastern side of the world. Do first is to go through some basics of the RMO system that's inbuilt into Metastock and help you through understanding what we need to follow in terms of disciplines. So the first thing we need to do with the RMO is understand what is it trying to tell us. It's trying to tell us where the long-term direction or the primary trend direction stands at. And the RMO being above zero or below zero, it appears as a histogram in a indicator styled window. And all we need to understand is that indicator trading at a value greater than zero or less than zero? In other words, if it's positive or greater than zero, we're bullish in the long term or the primary trend is up. And if the RMO is trading below zero in terms of a negative value, that is, it suggests a bearish pulse in phase, at least on the long term trend. Now, in addition to just the RMO oscillator, we also have blue bars and red bars and arrows. So we're going to put all these things together and try and help you understand the various trading decisions. Now, just to give you a bit of history, how the RMO came along, I mean, pretty much a lot of us like to use several indicators. Again, I'm not someone trying to tell you use only one, but the average folk today wants to use an RSI, a MACD, a stochastic, candlesticks, moving averages. There's a lot we try and do. And I think what happens is we get too laborious in analysis, and that tends to make us drift away from the fact that we're not analysts only. We're here to trade. We're here to take decisions. If we need to focus on money management, we need to focus on trading uh, and less on the analysis. And the way we can do that is with tools inside of MetaStock, including the RMO, which are highly automated. It's doing the hard work of churning the numbers out, right? So instead of us, adding various indicators and coming to conclusions, it's much easier if we could do it a little more methodically and make the whole approach rule based. I'm someone very for the rule based approach, because what tends to happen is as traders, we're all emotional. We're finally human beings. We tend to get emotional with what we see. For example, on this chart, the reason I have this up is you see a market that's going up. And every time it goes up, there's some people who feel, oh, there's a negative divergence. And what we need to understand is, just seeing a negative divergence, and to simplify it for those who don't know about it, if the RSI is above 70, we're overbought. And if the RSI has falling tops and the price has rising tops, that's like a negative divergence. So in other words, it gives us a bit of a warning that maybe we're getting toppish. But look what happens in the market. It continues up and you keep extending this line. So what happens with the conventional tools is you can spot a divergence, but you don't know where the divergence ends. So, it often stops you from trading. Or, for example, a MACD, you see a lot of downward crossovers on the MACD, and you tend to, lose grip of the trade. So the whole idea is, if I could get a better system which does the integration for me, instead of my trying to decipher that, oh, the one I want to use is the RSI, or the one I want to use is the MACD. So here's what the RMO does. It puts out a straight cut, uh, oscillator, which gives you it above zero or below zero. So here are MACD symbols, which are plotted on the chart through the inbuilt expert advisor. So you can see there's lots of trading signals over there. And the best way is to avoid looking at too much of all of this, because whilst you're getting buys and sells on the MACD, and you may say there's a positive divergence on the RSI, the stock may actually be going down. So there's a lot of analysis that we are trying to process manually. And if we're trying to process this information manually, then uh, the whole issue is we tend to follow what the heart says. You probably would say, oh, I think, yes, this MACD is correct. Forget the fact that maybe the RMO is negative. And, that's when you start using too many things. So the RMO as a system, as a template, kind of builds in the short-term, medium-term, and long-term focus and lets me get more methodical. So I'm not trying to say that the RSI or the MACD or any other conventional tool that you use is a negative, but what I'm certainly suggesting is it's not subjective. It's more objective. It's more rule-based. It's probably more accurate because of the fact that it's merging in different themes in terms of time: short term, medium term, and long term. So as we'll discuss today, you'll see that it helps me iron out the direction, the primary trend direction, with absolute ease. So what you're seeing here is the RMO is negative. So, instead of getting worked up with the MACD buys, you need to focus on where you want to short sell it, right? So that's how we're looking at it. Here's another chart where you can see this is a straight line market virtually, or a very, very strong uptrending theme. And what we can see over here is the market's continuously suggesting an upward strength. So if you're looking at an upward strength in the market, we're really looking for opportunities to buy. You're not getting worried when you have a 5 or 6 day drop, like you have here in December, like you had here in July. You're not getting too worked up over there. You're just using this as an opportunity to kind of re-enter into an already established uptrend. So that's the thinking in terms of the RMO. And how you apply it is, if you right click on the chart, and you hit apply template, and that's where you select the inbuilt RMO, which is there inside of MetaStock. Again, this is not an add-on, this is inbuilt into MetaStock. The add-on that I have is something called the ATM, which I'll kind of help you understand that a bit later and more details in the next ones. But today is all about the inbuilt RMO primarily, so that's what I'm using, the RMO trade model, and that's what we're going to be applying. So right click, apply template, and everyone has this template. So when you hit apply, this is what you see. You get the short term, long term, medium term through these various histograms. And along with that, you also get arrows, bar colors on the chart. And what we need to do is process this information into trying to get a triple momentum measure. In other words, why a triple momentum? Because we're trying to assess the momentum on the short term, the medium term, and the long term. So in other words, there's a pink histogram, which is the swing trade indicators, which indicate the short-term trend. The blue above zero suggests the medium term being positive, and the green is the long-term or the RMO. Now, obviously, as traders, we want to be looking at points where both, or rather all three of them sink in, whether short term, medium term, and long term sink in. So that's what we really need to be looking at in terms of the trend. So here's what we are trying to achieve when we are trading the RMO. When we're trying to trade the RMO, we're trying to trade in the direction of that primary trend because it increases our odds of winning, and it takes us in the direction of the stronger force. And of course, the big thing is that we have a focus on that big picture or the long haul. And this is very important because, when you look at a little bit of a down dip and you get worried in the short term, if you have an indicator which can guide you and tell you that what you're seeing is a correction down and an opportunity to buy, that's really helpful. Similarly, if you're in a bearish stock and the stock's actually rallying up, you understand that that is giving you an indication of an opportunity to sell short. So whenever the market goes up, if the RMO is negative, you are able to sell short. So let's look at how we could simply define these various colors. And the way you can define this is that the RMO on top gives me the long-term trend, which means if the RMO is uh, above zero, then we're looking at long-term strength. If the swing trade indicators are above zero, the short term's up, the pink one. And if the blue line is also above zero, that's when the medium term is up. So how we kind of marry these together, and again, you don't need to do it manually. The reason I'm explaining it to you is so that you understand what's really generating those arrows and bar colors that you see. So if you see a red bar color, it indicates that the pink histogram is negative or the swing trade is negative. And if you see a crossover of the pink and the blue, that's what pops up the arrows. So every time you see the short term and the long term, short term and medium term intersecting, you get the little blue arrow or the red arrow. So why do you get a red arrow when the pink slips below that blue? So every crossover, now you don't need to manually look for it again. What we're finally going to look at is the arrows. So folks, if we're looking at all of these red arrows, which you see in February, in March, April, we see a couple of red arrows on this chart. We're not going to use this to sell simply because the long-term trend, which is our main area of focus, our long-term trend is up. And if the long term's up, we want to be trying to buy. So instead, let's focus on the blue buy arrows and not the sell arrows. So what do the red arrows indicate? Maybe if you get some short-term pressure, use those little dips to buy in. We're not trying to sell short. We're not trying to exit the stock based on those red arrows. Those red arrows are to be ignored if the long-term trend or the RMO is positive. All right. So that's a bit of a quick overview of what we're doing in terms of direction. Long term being our primary direction, the green histogram is the RMO, If that's up, we are really tuning up to find out where is the medium term and the short term looking up. And again, I've been using this system for a good decade now, and I can tell you that you will mostly be on the right side of the trend. And trend detection becomes so easy. You just open the chart with the template. What's the long term? It's up or down. Is it above zero or below zero? If the long term's up, let me focus on where can I, look at an opportunity to buy and not focus on the sell side. So it helps me align very easily and very quickly rather than trying to look at 10 different things to confirm, reconfirm, and then come out of the woods of confusion at times. So that's what it's going to help us do, get a sense of direction. Now, what's the best way to look at the RMO? So the rules are fairly straight cut. We're looking at a synchronization of all three, uh, where you have a blue bar color, which is indicating the medium term trend, where you have an arrow up, which indicates the short term trend, and where you have the RMO in a bullish mode, which indicates uh, RMO above zero indicates a strong primary trend. So where all three of these sink in, that's the first point we break out. So what we need to do is focus on the first point. So like you see in this chart up here where I've got the vertical line around mid-November, that's the point you want to be using as an entry point, because that's the first time where we've rotated out of a RMO bearish zone into a bullish zone. So when you can see that swing in terms of trend going out from red bars to blue bars, going from a red RMO bearish, we have that marked as a ribbon on the bottom. So if you look down at the x-axis, you can easily see that we have an indication where the RMO is negative. So a lot of you who want to save your screen real estate, you may actually just close the RMO histogram and the swing trade histogram and just use the chart window, because you're pretty much seeing these expert advisors and the ribbons giving you all the indications that you need. So again, suit yourself. I still like to keep the RMO histogram because it helps me understand how close am I to zero. Maybe I'm close to zero, then I get ready that if it changes, maybe I need to change tack. So that's really one of the key utilities. I always get the question, does the curling of the RMO, does the shape of the RMO, or the size or height of the RMO matter? It does not. So do not try and read excessively into it. We're not drawing divergences on the RMO. We are not trying to say that the RMO is overbought, oversold, etc. We're not trying to read the curls of the RMO. And again, the reason I'm kind of bringing this up is I've seen these FAQs keep coming up, and users try and overinterpret. Oh, they've got a slight curl on the RMO. The curl doesn't matter. What matters is the RMO above zero? Is the RMO below zero? Is it positive? Is it negative? So let's keep it simple, and that's probably the easiest way to be successful. Yet, I think a lot of users find it hard to accept that, oh, it can't be that easy. Maybe I need to work a little hard and put in some more labor on the trend. Honestly, that's the whole idea of using a system like this. You're using the power of MetaStock, where the RMO is integrating several tools, averages, indicators to give you that conclusion that the RMO is, or the long term is up or down, right? So we must harness the power of the system rather than trying to reinvent the wheel. And again, feel free to go back in time and see how it's performing on the stock. I always recommend that. And in the main, I'm sure you'd see that 7 out of 10 times you're on the right side of the market. And if you can focus on the first breakout, that's the point where you want to get in. Now, subsequently, if I come in here, there's a blue bar over here as well. So somewhere down in January and February, we've got 3 blue bars. The reason I don't want to be buying on those blue bars is they're really add-on trades. They help, but the idea is you want to come in on the first breakout. We don't want to be coming on the second and the third and the fourth, because you're buying much higher, your risk could be higher, and at the same time, uh, you're not getting the juiciest point to get into the trade, if I may put it that way. You want to get into the most potential point, which is going to be where it breaks out for the very first time. That's the most potential point, the most rewarding point usually, where the trend shapes out for. So instead of trying to look at add-on breakouts, necessarily focus on the first breakout if you're really looking for the best ones, because you often do get scans, you often get signals through your explorers which indicate add-on signals as well. That's where where I need you to come in and say, hey, I want to look at within these 5 stocks which are identified as RMO buys, which one's the first breakout and not an add-on breakout. And a quick look at the chart will definitely help you understand that. So look at the first breakout, in other words, where it's rotating from a bearish zone into bullish for the very first time. That's what we want to focus on. Now, here's another, uh, you know, interesting way to look at it. You're looking at 3 pointers every time you buy, or 3 pointers every time you sell. So we're looking at, let's actually put it on a chart for you, a 3-dimensional buy. So as I was talking about, a blue colored bar, a buy arrow, and a positive RMO. And what this indicates is, remember, the blue colored bars indicate the medium term trend, the arrows indicate the short term trend, the positive RMO, the RMO itself, indicates the longer term trend. So when you look at this chart, notice the short-term signal or the arrow comes in first, followed by the blue colored bar, which is the medium-term trend, and the RMO goes bullish. Now look at the x-axis ribbon. From bearish, we turn bullish somewhere around that 24th of March area, and that's the point we're looking at a turn in terms of trend. So where all of these are integrating are this point, and around that March 24th area. And what you're seeing again in the second vertical line towards mid-April is actually a add-on signal. So if you go very, very mechanically, you may say, oh yes, there's a blue colored bar, there's a buy arrow, and the RMO is bullish. But again, uh, remember, our focus is, can we get in on the first breakout? That's going to be the best one for us. So focus first breakout. If you're chasing a high quality signal, a high potential signal, that's the one we want to go with. So like you see on the sell side, this is an equally important signal, because a lot of people are only focused towards buying, whereas I keep telling users that you have to be trading the sell side of the market equally well to be a good trader. You don't want to be the boxer with one hand. If you're just buying, it's not going to leave you in good shape the minute you have a bear cycle that comes in. So be equally diligent when it comes to short selling. If you don't like short selling the futures, you could always opt for buying put options, which could be a safer strategy, but trade the direction down as well. And a 3-dimensional sell would mean, again, a integration of the arrow. You can notice on this chart, the arrow comes first, followed by the red colored bars, and then the RMO turns. So wherever the three sync in together, you can actually take a trading decision on the sell side. And again, we've got explorations for this. We've got a power screener for those of you who have the ATM, which automatically highlights to you those stocks which have integrated and given you this breakout. Okay. So don't think that this is a manual process of you're going through all the different stocks. You've got the wonderful Explorer inside of MetaStock, where you've got some inbuilt scans available. You've got the power screener for those of you on the ATM add-on of mine, which does the integrated scan as well, and can send you an email alert, a voice alert, things like that. So don't worry about detecting the trade. It's automatic. As long as you understand that when I see a sell here, this one's an add-on sell. So the one that you see in August and September that are marked as vertical lines, these are add-on sells, because this is a sell in an already existing downtrend. This is a sell in an already existing bearish phase of the RMO. The RMO has been negative and still is negative. It's just that the medium term flipped up a little bit and you rotated back down. So we are not buying when we see blue bars alone, or we're not buying when we see buy arrows. We really want to do this in the direction of the long-term trend. It's a bit like the expression, if the river's flowing upstream, you don't want to be trying to go the other way. So you want to go upstream as well, because that way you're going to be trading in the direction of the current, in the direction of the force. So if the RMO is negative, I'm really looking at trying to trade all the sell arrows. So you could do add-on trades as well, but again, if you're trying to look for the better ones, that's the one to be doing, the first breakout, the one which occurred towards the end of May on this chart. So try and look for first breakouts, focus on the first breakouts, and give secondary importance to the add-on breakouts. How do we use the add-on breakouts? You could use them to upgrade your stop. So let's say you got a sell over here. Look back the previous 5 bars. So 1, 2, 3, 4, 5. We want to use the stop somewhere over there. Okay, so wherever you are looking at a add-on, we're more kind of saying, okay, you break the low of that bar, we want to use it as a stop. So now I talked to you about a very important term. I said break the low of the bar. So in other words, when you get a signal, where do we trigger it? We trigger it below the low of the signal bar. So in other words, you first identify where is the signal bar, which is where the RMO is negative, where you have a red bar and the arrow. So if all three are in sync for the first time, that's the first breakout. We will sell below the low. Now you may say, what sense is that? Why do we sell below a low? Classic Dow theory tells you sell weakness. And if the stock breaks the low of the bar, you get some kind of a confirmation as well, right? It helps you confirm the signal. So that's why we sell weakness. We sell below the low of the bar. Similarly, if you were to buy something, we want to buy above the high of the bar. We don't want to be buying just anywhere. We want to make sure it goes above the high because that's like a trigger point. That's a confirmation. So it's a very small confirmation that we need. And sometimes that could really help. For example, look at this chart here carefully. You've got the blue bar, right? You have the arrows. And then the RMO finally goes into a bullish. Notice the little trickle into green. If you look down towards April 5, 6, that's where you see the little trickle of green. And now you say, I want to buy above the high of the bar. You don't just buy a market. If you go by market, what's going to happen? You lose. Unfortunately, you got trapped. So notice it did not cross. And this is not a rare occurrence. This happens, you know, 3 out of 10 times. You get the signal, doesn't take the high out. So keep that focus. I want to use a trigger to qualify my entry. If I'm buying, I want to buy above the high of the bar. In fact, if you can see that, okay, let's look at the current bar's high. If I've got the previous bar that's even slightly higher, take that. Doesn't matter. It just helps you confirm, reconfirm. It's just a very small filtration you do, a very, very basic filtration of buying above the high, which helps you understand. Now, I often get the question, okay, how much above the high am I going to buy? Is it going to be 0.2%, 0.5? It's not a percent. Well, wait for maybe 5 minutes. Let it be above that level for 5 or 6 minutes, and that's good enough, right? So don't get too technical about it. Just let it go a few ticks above it. Watch it if it's above it for 4 or 5 minutes. Personally, I like to set up a price alert, and then I look at it from there rather than just, putting a trigger on it. I like to see it's not just a whipsaw, because often if you're trading a stock or a commodity which is low in volumes, it just goes past it, and maybe there's just one deal that happened there and that's it. So I like to watch it being there for about 4 or 5 minutes, and that way I get more comfortable on it. Now, a lot of folks ask me what's the best time frame to trade. That's altogether a different topic, but very quickly, you can use the RMO on any time frame of your choice. However, I do not recommend you use the system simultaneously on the same stock on multiple time frames. The RMO is designed to be a system that's already looking at the short term, medium term, and long term. Now, if you are saying, no, I primarily look at an hourly chart, that's fine. Now, you don't need to say, oh, I'm also going to check what the weekly is saying. I just need you to focus on that one time frames chart that you're looking at. So I'm actually asking you to do a little less. If you're trying to achieve more success with the RMO, do not over integrate a higher time frame. Often consulting higher and higher or more time frames leads to confusion more than confirmation. That way, if you're going to say, oh, the 60 minutes a buy, but I'm going to wait for the daily to become a buy, and then I'm going to wait for the weekly to become a buy, you pretty much could be reaching very close to the high. So be focused. If you're someone who's an hourly chart trader, or a particular time frames trader, stick to that one time frame. The RMO is already integrating the element of the short term, medium term, and long term. So keep that whole focus in mind, that we don't want to look at trading the system across multiple time frames. Let's focus on one time frame, but let's follow the rules diligently. Let's work on finding the first breakout trades rather than add-on trades. Let's also make sure that when we buy, we use a trigger. We buy above the high of the breakout bar. and we sell below the low if we're trying to sell short. So for example, you got a red bar, red arrow again. So you can sell below the low of the bar. So would I sell below this low or this low? It doesn't really matter. I don't mind going below that low, especially, this is something called an inside day where you have a small little bar that's tucked into the previous bar. So it shows a low volatility day. It's an inside day. So this is where you need to use a bit of, filtering, which you could do. Again, this is, if you want to follow it, just sell below the low. But again, don't get too mechanical. If you can see that low is going to be more relevant, why not? Right? So it just helps you uh, get a pulse of what you're doing and be comfortable on it. So, here's a chart which I've got up on the S&P E-minis, and this is an extract of kind of end of 2018, beginning of 2019, and you can see how it's catching the trend so beautifully. If you treated the RMO system somewhere around 15th to 20th October, you get that sell where the RMO goes into a negative. So you got red bar, the arrows down, the RMO's bearish, you sell short. Then you have a blue bar that comes in, the buy arrow that comes in, and just look at this so carefully. It does not go above the high. Again, it does that early December, gives you the blue bar, gives you the buy arrow, and then the RMO goes up, does not go above the high. So you got the signal in November, December. That's why I've marked them as dotted line, but you could not buy. You remain directionally short, right? Because it did not cross the high. Buy above the high. If you can understand that focus first breakout and buy above the high or sell below the low, that's what I want you to take away from today. Very, very importantly, in addition to the other pointers. So let's keep that in mind that when we are looking at buying, like you see over here, you get a blue bar that comes in. If I could buy above the high, that's better market timing. Otherwise, I just buy seeing a blue bar. You're always under the stress. Oh, will it go above the high? Will it confirm? Maybe it just stays there for 10 days. And, time often bleeds us mentally more than anything else. So let's keep this in mind. We want to look for the first breakout. We want to look at buying above that blue bar's high. All right. So coming to the red bars that you see here, again, you get an idea. This is the first breakout that we're seeing. Okay. We're looking at sell short, and this is kind of a more recent chart on the S&P, almost up to date actually. Uh, Took it this morning, so we've got a sell setup on the S&P, and that's when it dropped from that 3005 level all the way down. So we got the nice move down. You saw the little blue bars come in, but not good enough to buy because the RMO is negative. Where'd you land up buying? Where you see that blue line. So I've marked a blue vertical line for you there. That's the point where you want to be buying. Notice after that, what happens? You get the odd sell setup over there that comes in, but would you sell? No, they're blue colored bars. Can I sell on a blue colored bar? No, despite the RMO going into a negative. So this is what happens. They back you up because you're looking that, okay, the short term, medium term, and the long term must integrate. So here you can see, okay, whilst the RMO has gone negative, I still have blue colored bars. So something's amiss. I'm not going to be doing this sell, right? So look at it as, over here, the red bar comes in, the RMO goes negative. That should worry you. Does it go below the low of that red bar around 1 p.m. yesterday? No, it did not break it. So if it does not break that low, you're still bullish and long. So that's the whole fun of the system, that you're not trying to get over analytical, and it can wade through this whole sideways patch so well. And this is an actual uh, chart which we would be trading. This is the S&P index. Again, this is a very, very simple chart to be looking at, and you can see the performance in front of you. So, there's a big sideways patch, and the reason I chose this chart was I could see there's a good 50 to 60 bars between, say, 1 p.m. of the 24th right up to 1 p.m. of the 25th. That whole 50 bar phase where you can see that the market's been choppy, sideways, trying to fight direction. And this has kept you so beautifully short in the beginning and then got you long in time for the rally that happened up, right? So let's try and understand that we're trying to trade in the direction of the RMO. We're trying to make sure that we use our trigger. We don't just see a red bar and sell. We want to make sure we sell below the low of the red bar, provided the RMO is negative, provided it's a first breakout. So these little pieces, the minute you put these together, that's what will start making a lot of sense. Now, let's also look at some more stocks. And again, I, let's look at, say, Google here. You can see how on a daily chart, this is done pretty well. I mean, you've got the whole uptrend early 2018 from mid-April. You got the buy set up, and that's the first time when the RMO turned positive, and you got the blue bar and the buy arrow, and you get that whole nice run up. So all these little moves down you see, whether it's in May or June or July, you had nice rotations down. And all you said was, hey, I'm not going to be trading the sell side over here. I'm going to use these moves down probably as an opportunity to buy, because my longer term trend is still in the upward direction, right? And we want to focus on the buy side of the market. So don't worry about little rotations down if the RMO is nice and solid and positive. So when the RMO turns negative, and you can see the integration where you've got the red bar, the red arrow, so and the whole sell comes up, you're trading the sell side of the market. Then early 2019, we had the nice rally up, which gives us. So again, these are not manufactured charts. These are real charts that I'm using, and this is stuff you and I trade, and you can get an idea here how well this has been working in terms of direction. It's been fairly simple, despite all the sideways and choppy price action that's existed. And again, believe me, I'm not here just to show you the rosy side. I'll take you further as well. So that's what you see. That's 1 year's data that you see, April 2018 to April 2019 on your screens there. Let's go further. What happens the last 6 months of trade? Now, you had the big rally, which was April, which we were discussing. Then you have a sell that comes in. Now, this is where I want to bring in some sense over here. When you get a sell this deep, I'm sure you're all going to wonder that, should I even take this sell? Because now, how do you assess, is it too deep? It's coming, it's probably retraced way beyond. Usually you want to get a sell a little higher up or after some kind of a distribution. This sell looks like is, probably a 40 bar low point, or maybe it's already gone down. Or it's called, from where it started even rallying up. So if you feel it's too deep, and when I say too deep, maybe it's at a 30, 40 bar low, maybe it's retraced the entire rally up that it did, you can tend to avoid it, because if you're going to sell this deep, you're also going to be probably selling a bit late, and you also have a greater risk. And one of the ways I kind of look at deep is the fact that, look at this here. You got the arrow which comes here, then it took 10 bars for a red bar, and then again 10 more bars for the arm motor to a negative. So you literally wasted like a good 25 bars to get aligned in terms of that sell signal. So you could give it a pass. You don't need to necessarily take it. But if you do take it very mechanically, no problem. You still take it. But then when you get the buy, you want to buy again, because you can see it pushes you back into a buy a little higher than that price. But it doesn't make you suffer too bad. You get another sell signal, uh, which you could wade through. So look at this over here. You got a red bar, red arrow. And this is again an inside day, a bar that's tucked into the previous bar. Try and use this bar as low. Ideally, try and use this bar as low. Doesn't trigger. So, you're literally trading on the buy side of things. So whenever you get an inside day, that's why I drew it out here for you. If you get a bar that's kind of tucked into the previous bar, instead of using this bar as low, folks, try and use this bar as low. Not that you're not really giving it a lot extra, but you're definitely filtering out the signal so beautifully. So look at using the inside day filters. Try and use the bigger bar rather than the inside day bars low, right? So uh, even now, you've basically been on the buy side on Google right from that whole end of June, beginning of July breakout, where you have the blue bar, the buy arrow. So even here you have the blue bar, buy arrow. So uh, this is an important factor. We need to really understand that if you stay in direction of it, if you look at the whole chart of Google, I showed you 1.5 years of data on a daily chart. Uh, this is probably the one signal which was, I won't call it bad, but it was late. It didn't work out. But then what's bad with that? I mean, How many systems have got all accurate signals for the last 1.5 years? Very few that I can think of. So how many systems are this easy? How many systems can help you be hands-free? Notice I'm not drawing lines and not looking for divergences and not getting very complicated. It's just a hands-free approach. It's a very visual experience that I aim at delivering to you with the RMO, and hopefully this will help you, especially even if you're a beginner level. It definitely helps you. But even advanced technicians who use the system, they've come and told me, look, we look at so many different things, but we finally just prefer we had it all ironed out like you did. So a lot of advanced technicians kind of moved into using this system. And again, I'm sharing with you the feedback that they gave me, that this is so much easier. I don't need to do, five more things to come to the same kind of conclusion. So besides, when you look at too many things, you tend to follow the one that you want to follow, or the one that your heart kind of beats to, rather than going as a rule-based methodical approach. So it takes out that subjectivity that I was talking about. Let's look at more charts. Let's look at the last 1.5 years on Apple. So you've got the buy, which starts again towards an end April phase. You have a little sell that comes in around end of June, red bars. Okay. But why would you not sell? The low of that bar is not taken. Notice that's where the RMO goes negative. That's where the RMO probably just 1 or 2 days, but the low of those bars are not taken. So you do not actually go short. That buy kind of stays on. Then you have the sell phase. You get the whole downtrend. Then you have the buy phase from February right through April, where we had the rally up on Apple. Okay, so that's the big rally you saw February through end of April. Then you had the drop down again. So notice over here, isn't this too deep? S- Arrow comes there, then 7, 8 bars later, you get the red bars. So they kind of, the signals have come in very far. Look at this buy signal. You got 3 blue bars and you got a buy, right? The RMO turned buy immediately along with the blue bars. Whereas look at this. First came the arrow, then came 6, 7 bars later, the red bar, then came 7, 8 bars later. So it's kind of a bit disintegrated if you understand the feel of what I'm trying to get at. So, try and look at these elements to get more comfortable. And again, don't force yourself to trade. You don't have to be someone, if you're in doubt that, oh, this looks like a disintegrated signal, a very late signal coming too deep, doesn't matter if you miss a trade, but I don't want you to be unnecessarily risking a lot of money there. Okay, so look at this. Why is this so integrated? Red turns blue. On the very same bar, you also have the arrow. So the medium term and the short term and the RMO are all synced in within a window of 1 or 2 bars here. So beautiful. I mean, why not? This is the first breakout. Yes, because it's coming after a series of red bars, coming after a negative RMO phase into a positive RMO phase. So, that definitely is the trade I want to be taking. So even till now, uh, so if you look at the last 1.5 years on Apple too, you ride the whole bull wave, the bear wave, the bull wave again, early 2019. You didn't have a lot that you could do here. You could probably avoid this trade, as I was telling you, or even if you did it, let's say you did it, you get stopped out. What's your stop? The previous 5 bar high. So 1, 2, 3, 4, 5. You're going to take that bar as your stop, and you get stopped out. So just because you have one bad trade in 1.5 years, that's going to happen. You should probably have more, in my opinion. It's too good to be true that the system's working so well. So keeping you on the right side of the trend, it's not going to happen always, but this is the stuff we look at: the Apples, the Googles, the Amazons. That's the kind of stuff. The S&P. What I'm trying to show you, the Dow. That's what we're trading. That's what we're looking at on a very, very active basis. So the idea of giving you these up-to-date charts and sharing this with you today is so that you can understand that even if I traded the last 1.5 years, which was not an easy phase because you had, probably 2 rotations up, 2 rotations down, were you able to go through that? Apple was the easier one. Remember the kind of stuff we saw on Google? Look at the chop that we saw between October and December 2018. A lot of chop, a lot of sideways price action, but helps me stay in direction so conveniently. Helps you sell right there and stay short. Buy when it breaks out, stay long. So even if you get the little red armor bearish where it has the one little down tick over there, you can't sell because you got the blue colored bars. So the integration works so beautifully. So keep that in mind, that this is the kind of stuff we're looking at. And how we can do so well with this. Here's an example with Fibonacci. I mean, I don't know how many of you like to use or use Fibonacci, but this is something I enjoy doing. In fact, I'm probably going to be talking about in my upcoming webinar series that we do. I want to talk a lot more about Fibonacci and Fibonacci projections. I really enjoy integrating Fibonacci with the RMO. It gives you a beautiful sense of price targets as well as confirmations. So I'll talk deeply about that in future sessions. I think Jeff will give you an idea when those webinars are scheduled and how you could get access to those. But again, very quickly on this chart, wherever I have a first breakout on the RMO, so we've got a blue colored bar, the buy arrow coming in, and the RMO is turning bullish. If you can see that it's getting above the 61.8% retracement level, that's an even more solid signal, right? It kind of helps me understand that I'm breaking out into something bigger, potentially a wave three, if that makes sense to you. Or, well, if waves is something you haven't read or heard about, well, a major breakout, an impulsive up move is likely. So you draw the retracement from the recent high that the stock made down to the recent low. The tool's called Fibonacci retracement, and you automatically get the 61.8% level. So if you're breaking out of the 61.8% level when the RMO signals are coming, you could potentially be trading for something big. Again, to recap your stops, if you're using a sell signal, you want to count back 1, 2, 3, 4, 5, use the highest point as your stop. Okay, that's how we've tested the system. So please kind of stay with that rule. So if you get an add-on, what you could do is, upgrade your stop. So maybe you sold here with that stop. Every time you get a new red arrow, you can say, okay, count back 1, 2, 3, 4, 5. What's the highest? That's my new stop. So every add-on signal that triggers, you want to be looking at a potential upliftment of stock. It helps you not just upgrade the stop, but it's more like a stop profit level, more like a trailing stop level as well, if you could follow it this way. Now, we also have another model to exit. I talked so much about entry. We use the exit swing signal, which is also there by default in the template. The exit swing signal works between a scale of 0 to 100, and there is a red line and a blue line. If the exit swing signal, the dark green histogram, rotates below the red line, you should exit longs. Similarly, if you are trying to exit a short, you want to see the dark green crossing this blue line. So you can see here it was below the blue line. On this bar, it's crossing the blue line. You want to use that bar's high as an exit point. So again, let me caution you, try and use the exit swing signal only if you're in a profitable trade, only if you are already in an existing uptrend. You've seen at least 6 to 8 bars run up in your favor. That's when you use the exit swing signal. Don't use it otherwise. It's not going to work uh, in a choppy market. That's why it's called an exit swing indicator, not an entry swing indicator, right? Not a swing indicator. It's called specifically an exit swing so that it can give you a lead signal where it's looking topish. Maybe you just exit over there, you get a move down. Maybe you get another buy from here and you can rotate back up into the trade. Maybe the RMO never does come into a negative zone. It's at least helping you exit and rotate back up into the trade again. So use the exit swing signal as an exit mechanism if you really got rolling on a profitable trade. So as I said, use add-ons as successive signals or opportunities to upgrade or trail your stops. When in a profitable single slope trend, where you can use the exit swing indicator, which is there. And finally, I always stress that consider exits from a financial and a technical perspective. So whether you like using the Fibonacci targets, whether you like using previous resistance as a price target, or you're someone who's into Elliott wave, it all depends as to what technical tool you're comfortable with in terms of setting a target. You should definitely do that. And I always like to keep a financial objective as well. So for example, I may have a percentage financial objective. I may have, so this is the area I need you to focus on. This is what we need to get thinking all about: money management. Okay. And again, I've got an entire session that I'm going to be doing on money management as well in the next webinar series. So again, we'll give you all the details there, but this is where I need you to be looking at. These are the areas and elements I want to focus on. not becoming an analyst, but coming out of the shell of an analyst and trying to focus as a trader, because a trader thinks about his financial objectives, his stops, and how does he trail his stop, and how does he exit his trade better, how does he choose between multiple entry signals that he's getting. So that's what we need to focus on as traders, and all of us individually, we can all grow into good traders and better traders if we apply ourselves to this element of trading, right? Fortunately, with the RMO, with tools like the ATM, tools like MetaStock, we should harness the power of this technology that we have access to. And again, coming from a family where I've seen my dad doing charts by hand, it's, in the days where there was a facet machine, we didn't have a calculator. I really understand the worth of even a single moving average. For example, it was so hard to calculate a moving average. Today we have technology which does it all in one click. We don't need to buy the graph paper. We don't have to have the long tables where you have to draw those charts out manually. So, in those days, it was very hard. Today, it's very easy to get access to such refined and automated strategies, courtesy MetaStock. But in those days, it was very tough. But we don't appreciate the technology more, hard enough. We don't use the technology well enough, because what happens is we get lost in the crowd of noise that's happening, because we're not focusing on the trade. We're focusing on, oh, let me use 100 different indicators, and we look at this and we look at that. We kind of lose focus. We use too many things, look at too many things. I keep telling people, even though I may be a panelist on CNBC and Bloomberg, etc., there's no need to watch the television as a trader, in my opinion. There's no need, because uh, the news, the fundamentals, it's all factored into price. Price discounts everything, right? So focus on the trade more than getting worked up about too many external factors, right? So focus on first breakouts. Again, reminder, not the add-ons. Okay, use the add-ons as a way to upgrade your stop. So every time you get a blue bar, buy arrow, and it's already in an uptrend, okay, just use the previous 5 bar low as your new stop. So use that as an option to upgrade. In fact, a lot of times when I get a red bar and the RMO is bullish, so look at this, the RMO is above zero and you get a red bar, I often get the feel that, okay, why not buy a call option? Maybe the stock's dropped quite a bit. If I go wrong on this and the armor turns negative, I'm not going to lose a lot of money, because I'm already red. I already have the arrow. You could use this decline to buy, and that's where you need to start using those red bars. So you see 2 or 3 red bars trickle in. Maybe it's an opportunity to buy calls. Maybe it's an opportunity where you buy a small little quantity with a stop that if the armor goes negative, we get out of it. Okay, so let's apply ourselves here on these practical elements. Simple things like volume also help us integrate trades really well. For example, you get a buy breakout here, blue bar, buy arrow. If you get volume all below average, look plus minus 2 or 3 bars of the signal, all below average volume, don't use it. In fact, the moving average of volume here is a 50-period exponential average of volume. It comes up automatically when you load the RMO template. If the volume's all under average, we are not going to be taking the buy trade, right? Just simply ignore it. Look at the buy that comes in around mid-August, blue bar, buy arrow. Look at the volume around it. In fact, one of the highest volumes we ever saw in the last 2 or 3 months. So definitely want to take this trade. As long as you look 2 bars behind, 2 bars forward, if you have to, if this better than average volumes, again, I'm not asking for double, but maybe just 15-20% above average, good enough. I mean, at least it's good to go. You don't want to be trading an under average signal, because it could be noise. Okay, so all of this help us. So you can see here's another example: red bar, under average volume. All of these elements help us in terms of becoming better traders and filtering out. So let's recap. If you want to trade the RMO with optimal performance, I want you to look at the first breakout. I want you to trigger those first breakouts with a filter. In other words, buy above the high. And I showed you sometimes you have an inside day, you want to use the higher point or the lower point. Above all, stay disciplined with the rules and your time frame. Don't keep switching time frames. Most people who change time frames, they're changing time frames because they're losing money. You lose money on a 5-minute chart, you make it a 15-minute chart. You lose money on a daily, you look at the weekly. I am a very firm believer. Let's have a system that integrates the short term, medium term, and long term, rather than us trying to integrate timeframes manually. You should have a system that can handle short term, medium term, long term. That's the goal of the RMO. It already does it for you. Use Fibonacci as a guide. I showed you very, very briefly how simple thing like the 618 retracement of Fibonacci. If you're getting a new first breakout, breaking out that 618%, 61.8% retracement, it's a very good signal, an impulsive breakout. Finally, as I showed you, volume. Whenever you get a first breakout on the RMO, try and look at the volume on that bar, maybe 2 or 3 days before that bar came in, 2 or 3 days after that bar if you want. If you don't have above average volume, how are we going to become a trend? If there's no money in the stock, there's no interest, liquidity on the stock, it's not going to break out. You don't want to be trading a whipsaw or a light breakout. Okay, so use volume as a confirmation. So that's how you can really find a lot of good trades. So for those of you on the ATM, you just need to run one scan: ATM RMO integrated buy or integrated sell. And I also have the new super filter concept, which I'll quickly show you right now. And you know, we'll probably get an idea how you can better this whole thing. So those are the scans you run. For those of you not on the ATM, you can still run stocks which are more bullish, and then from that scan those results for a new blue bar or a buy arrow, right? So step one, scan for bullish zone. Step two, within the bullish zone, whatever your results are, you can scan for new blue, and then you could also scan for where you have a new buy arrow. If you have the integrated, it's going to give it to you whichever ways. Okay, you don't need to be running multiple scans. One scan is good enough. So to recap, the RMO is rule-based and hence more objective, not subjective. I don't need you to draw lines, look for divergences, etc. It works on all time frames and asset classes. I personally trade futures, options, stocks, global equities. Uh, I'm absolutely comfortable with it. Does it work on Forex? Yes, it does. So without hesitation, feel free to use it on any asset class. As long as it's liquid, well traded, that's all we need to make sure. It should have proper open, high, low, close data, not just a little one bar tick, right? So we need proper open, high, low, close bars uh, and volume data ideally. So if you're in Forex, don't worry if you don't have volume data, the RMO still works. It's also backed by solid scanning and money management. Remember, we have explorers. That's why the mention of scanning. Money management, because you're taking a 5 bar low risk and you can trade for a long-term trend up or trend down. And of course, we can iron that out further in the future sessions in terms of money management. A lot to talk about and discuss on that one. Let me quickly give you an overview of my add-on called the ATM RMO. Again, I'm probably not going to have enough time to show you everything, but since we've done so much of the RMO, I love looking at that super filter. So the super filter is a new concept in the ATM, which is my add-on, and this betters the already existing RMO system. So it irons out the RMO. So that's quite a big deal. You're already trying to better an existing system. And again, it took me years and years to build this, even though the ATM as an add-on came out. We had version 1, version 2, and this came out with version 3 last year. So the ATM super filter is there to filter out the RMO signals. And notice the bar colors now change from a red, an orange, a light blue, and dark blue. So you no more just have a red and blue. You can understand the construction. There's a red bar which is fiercely bearish, an orange that's bearish, a light blue that's lightly bullish, and a dark blue that's highly bullish. So it helps you understand the construction. So often you have, look at this phase here, the RMO has been bullish, but what's the bar colors? It's still orange. So the bar colors kind of tell you that don't go with it, right? So there's this lovely filtering mechanism that comes in with the super filter, with this new color coding. It looks very simply presented, but under the hood, there's a ton of stuff going on. And again, the ATM is all about trying to find the best value for that stock. For example, if I applied a 20-period moving average on every stock, it's going to work very differently for each one. Maybe there's a particular stock that needs to be using the 28-period moving average. So that's what the ATM does. It tries to find the optimum value, and that's how it optimizes the performance on the system. So uh, very clear, very candid. You just look at light blue, dark blue colors, and you understand the construction of the trend. When you turn from dark blue to light blue, that shows you moving out, getting into deep red, entering a bear grip. Often the deep red comes in even before the RMO. So you can see with the bar colors, you get an early indication of a potential change of the RMO. So it could be much faster than the existing RMO as well. So notice over here you have a dark blue bar whilst the RMO is negative. So dark blue means very strong, very bullish. So here it comes in well before. Now notice over here the RMO has gone negative, but this stays light blue. It tells you hang in, don't sell it. So the indicator speeds up in terms of giving you a dark blue here, but it slows down by giving you a light blue here. Slows down because the RMO is already bearish, but the indicators, the colors have told you that don't take the sell. So don't think that the ATM, the RMO super filter is just necessarily a faster signal. It will also slow down if it needs to. As I said, it optimally adjusts to the volatility of each stock. So it's very clearly paying attention to volatility, and it takes out the chop. So often it goes RMO bearish to bullish. Rather than you manually integrating all of it, it just says light blue, wait for it to go red, and that's when you fire. So okay, so even though the RMO went negative there, it helps you do the market timing bit very well. So that's a very simple comparison that you see. The one on top is the super filter, and the one at the bottom is the original RMO. Again, it's kind of comparing one system with the other, but it's a hard comparison. But you can see no red bars here, all light blue. So it takes out the noise. So here where you sometimes be worried, oh, there's a little trickle of RMO bearish zone, but it's light blue. You don't get worried. But here you may potentially run that risk of getting into a short, stopping out, re-entering buy. So it's definitely more refined when you have it optimized. So it's kind of tailor-made to the stock, if I could simply put it. So here you can see more and more examples where this is the original RMO, where sometimes you have a blue bar. Like I'm just trying to show you where it particularly helped. Blue bar breakout over there takes the high out. When you look at this whole thing on the ATM super filter system, you can save a lot of these trades, right? So I'm not saying you'd save everything, but even if I save half of them, that's good enough. Just look at the kind of up and down that we've had on Amazon earlier, end 2018. By staying red and orange, you didn't get into a long position despite the RMO going into a positive. So you didn't threaten any of your sell trades, and you stayed short. So that's the beauty. I mean, when you look at, I mean, this is giving you that understanding that that's where you were getting a buy earlier on Facebook, but when you look at the super filter, which is the optimized one, you get an idea that doesn't really allow you to get into that buy over there. So obviously something tailor-made, something tuned to the value and volatility of the stock will perform better. But again, more on the ATM, as we go along. That's the add-on. We're going to be doing more webinars down the line, and you can definitely join in for those, register for those so that you can understand more of the RMO as well as the RMO ATM and the super filter. And mind you, the super filter is just one element that I talked about. There's several indicators, 35 different power screener fields, 11 explorations that I have for you. So various strategies come to you with the ATM. So, and it comes to you also with a separate application, which is a power screener, which I call your go-to screen, because this is where you get live alerts. So let's say you're looking for an RMO 3D buy or a 3D sell. Notice it's just going to stamp it for you, right? So it's just going to say this is a 3D buy, and you can set it on any interval. So you're trading a 10-minute chart, a 5-minute chart, a daily, a weekly chart. Set it on an interval of your choice, a stock list of your choice. You can say I'm looking for a breakout catcher. These are different indicators, the zone detector, the trend decider auto. These are various indicators included in my add-on. It also helps you try, put in your positions, track how much money you're making or losing on that trade. So it's a lovely live scanner, your go-to screen. It works with both end-of-day data as well as real-time data. You don't have to be on MetaStock real time. It does work on end of day. But if you are on Zenith or the real time version, definitely helps because you get the live signals as well, right? So on end of day, you get the signals end of day. That's natural. But that's what the ATM is all about. It's a game changer, in my opinion, because let me tell you, this is the first system which really has voice alerts. It actually talks to you. It says, buy XYZ stock because there's an RMO 3D signal on it. So it can even fire an email alert. It talks, so you don't have to be visually glued to the screen, if you understand what I mean. And this is all stuff I made from the practical perspective of a trader, because trading is what I do. I need something that's easy, hands-free, and also ensures that I don't miss an opportunity. So I'm not the kind of person who needs 20 screens in front of me. I need one good solid power screener, which does the hard work of sifting out the stocks, and I look at the chart on the next screen. That's it. So the power screener is a game changer. Personally, you don't need to be manually running explorations. Even it just runs all the time and fires those email alerts and voice alerts to you. So that's about all I have time for right now. I'm going to open it up to Jeff and for any questions.
Okay, let me go ahead and do this.
Jeff, are you there?
I am. I am. How are you doing,
All right.
Rahul? You did a great job, by the way. We have a lot of
Thank you.
questions, both
All right. That's
from
great.
YouTube and as well as GoToWebinar. So the first question that we have, I'm going to answer. Abel wants to know if he can get a recording. So obviously, if you're on YouTube, just hit the rewind button and you can watch it. For everybody that's joining us from GoToWebinar, within about an hour of when we're done, you're going to get a message that'll have a link up to our YouTube channel with the recording that's ready as soon as we're done. So you'll get a recording when you're up there. Make sure you like our awesome videos and make sure to subscribe. So there we go. Vasilis has a question. Ideally, we follow RMO and daily charts, question mark. I'm asking because in a shorter time frames, they're quite different movement. So I think the question there is, what kind of time frames do you recommend we use for RMO?
So it's a great question, and I keep getting this one. So for the benefit of everyone, the RMO strategy can be used across all time frames, as I said. Again, but I'm not someone who kind of recommends a 2 minute and a 5 minute necessarily. I think you can go beyond that, extend your time frame, and do well. Uh, off late, if you look at the dailies and the weeklies, the stops are very big. If I tell you to even put the stop at a 2 day high or low, the stops will tend to look very big. That's one of the negatives. That's the downsides. I agree with you that the positives of using a daily and weekly, they're much more streamlined, much straighter and easier charts to use. However, I personally don't use the daily. I prefer using lower time frames. I prefer using the 60-minute, the hourly kind of time frames, because that's the profile I trade. My trade length is on an average anything between 2 days to 5 days, and I found more comfort being on a lower time frame than a higher time frame. So it all depends from which angle you want to look at it. But to start with, I definitely recommend you stay with just any one time frame. I call that the mother time frame, and not look at any other time frame. So give it a go on a lower time frame too. I think from a practical perspective, off late, I've been really enjoying using the lower time frames. Again, when I say lower, it doesn't mean I'm trading every minute or every hour. I'm using an hourly chart. So maybe I get one signal in a day. Maybe I get one signal in 3 or 4 days. So uh, yeah, feel free to use it lower time frames as well. Works equally well.
Okay, another question. This is from Vasilis. In relationship to volume, do we take it in mind only before and after the first breakout, or do we need to evaluate it during a following respective arrow?
Again, we need to be looking, when you get the RMO signal, we're really looking at 2 or 3 bars prior to the signal. In other words, what's the foundation of the signal? Are we getting a signal which is backed with some money or not? That way you have a greater confirmation and sense of belonging to that trade. If you don't have it, then you definitely wait for the next 2 bars. You say, okay, I didn't have the foundation of volume on the signal day, or even 2 or 3 bars prior to the signal. Maybe I'll give it another bar or two and see if the volume kicks in. That's how we're looking at it.
Okay, let's see. Another one that was coming out. Caesar asked a little bit earlier. It generally looks like, I'm trying to find the exact question. It looks like the RMO curls follows the price action. In an option trade, that is a lot of gain or loss to ignore. Shouldn't we factor in the curls too? And I'm basically what I'm saying, the way I read that, and you might hear that a little bit differently, but the way I read that is he's saying, well, it misses the exact top and the exact bottom. I responded to that a little bit in chat already, but I figured you might have something interesting to say about it as well.
I mean, this is a question, Jeff, that I always get. I mean, there's hardly a session where, everybody wants the bottom and top, and so do I. And again, I don't manage to find the top and bottom every time, or well, most of the times I don't. But I think trading is. I'm kind of getting into a little bit of philosophy here, but trading is all about making money. It doesn't matter if you bought it at $100 and sold it at 110, or if you bought it at 110 and sold it at 121. I mean, whichever way you make a 10 percentile. So I think the race is, you might get a kind of a high or a kick by buying at the perfect low, but that's just for kick's sake. But at the end of the day, it doesn't matter where if you bought higher, you bought safer, you had better money management, better confidence on the trade, I don't mind. So yes, the RMO is not going to find tops and bottoms, but at the same time, if you're trying to look for something that tweezes tops and bottoms, we have an indicator called the ATM counter trend indicator, which I'll be talking to about in the next webinar series, which Jeff will brief you on. That's where you could probably find what you're looking for, more of the kind of top picking and bottom picking strategies.
Okay. Um, Bhupinder. I'm sorry about that. I was reading two names at the same time.
Yeah.
Yeah. For take position, for which time frame is best for taking the trade? 2 to 3 days? I think that's a little bit the same question that we just answered in terms of time frame. But he's asking, I think the question's a little bit different, Rahul. I think he wants to know, if I want to trade for 2 to 3 days, what time frame should I be looking at? Or what would your recommendations be out there?
Well, if you're looking at 2 to 3 days, as I was giving you a hint there, maybe the hourly charts is good enough. You could even drop it down to a 30-minute. So it really depends on what time frame you use. So, what market you trade as well. For example, if you're, Bhupinder, I'm kind of guessing maybe you trade the Indian market, or some of you on this webinar trade the Indian market, which opens at 9:15, ends at 3:30. I like to look at a 75-minute bar, because you have 5 perfect 75-minute bars. Not all markets have perfect hourly bars. So let's say we open at 9 a.m. and end at 4:30 in the evening, you're going to have all hourly bars, but one 30-minute bar. So it doesn't make sense to be using a 60-minute in that kind of a market. So you have a feature called custom interval. So try and look for a perfect interval where you don't have one incomplete bar, right? So this is very, very important. So as you say, you just mentioned you trade Indian. So 75-minute is what I follow for the Indian market, because it gives you 5 perfect 75-minute bars.
Okay. Vidit has a question from YouTube saying, sometimes ATM gives a buy and CTI, so the BC breakout catcher gives us a buy signal and CT says sell. What would you recommend to do in terms of dealing with such a situation?
It's rare that you get a buy and sell on the same bar. Very rare. Probably, I would say almost impossible. If you're getting a breakout catch or buy and a CTI sell, the logics would not intertwine like that. But again, the CTI is a very different strategy. Again, I think the mistake traders tend to make is they want to use all the strategies, which is not correct. I mean, if you've got the ATM and you've decided I'm going to use the CTI, then you need to just use the CTI properly. You don't need to marry it in, because counter trend will never agree with trending. So counter trend is all about trying to pick a top. At a top, the RMO is always going to be positive, or trending indicators like the breakout catcher will be positive. So CTI is a very different approach. But again, we'll follow this up, in the upcoming webinar series, which we'll be doing the ATM Pro class.
All right. Okay. And I will say, in terms of, let me go into that a little bit as well. Rahul, you've done a great job. Let me go ahead and show this really good picture we have of you again. So we do have the ATM Power Screener RMO ATM 3 that features the Power Screener. Let me be careful with my word choices here. And it is a collection of Rahul's systems, including like the breakout catcher and a few of the ones that he alluded. It's a collection of indicators. Also includes the Power Screener, which allows you to open up a screen, and if you're using MetaStock real time, get real-time notifications of any signals that are happening in real time. It has the filtered ATM that Rahul was talking about. It allows you to get alerts. In other words, you can open up 500 different instruments and see anything that's triggering on a number of the conditions, all of which are included in Rahul's system. And a bunch of them are built around other technical indicators as well. It's a fantastic addition to MetaStock. It gives it a quote window with a real alert mechanism that you can use. And Rahul's done a really, really good job with it. I will also add it's been one of our most popular add-ons on a subscription basis. People love this thing, and I really appreciate the ones of you, the people that are using it, especially the ones that came today. Thank you. Normally, what we do for this add-on is you pay $149 per month for it. As part of the special that we're going to be doing today, we're going to be doing a $99 price. So, and that's an ongoing price. You pay $99 and you own it forever. Okay, and so it's basically a 50% discount for as long as you're a subscriber to ATM 3.0. The other thing that we're doing, and we've done this before with Rahul, and he does a fantastic job with it, which is why I wanted him to do it again. We did it a little bit right after I got back from Asia. I talked a little bit about how we were going to Asia, and he did such a good job with all the training sessions and all of the travel. He did a better job than I did in terms of kind of being more used to the time zone, and he just does such a great job and a thorough job that I wanted to do some live training classes with him. So these are premium classes. We're basically going to sit down in the first session, which is going to be next Tuesday, October 1st. We're going to be talking about trade detection and entry models. You can kind of see the bullets on that. During session 2, that'll be next Thursday. My anniversary, I'll be married for 22 years that day. He's going to be talking about trade management. And then on session 3, October 10th, he's going to cover the master class, in which case he's going to go through the ATM. So what we've put together with these classes, they're very affordable. Normally we value these at about $597. So the webinar special that we're going to do is going to include RMO ATM. It's going to include that lifetime discount, the $99. It's going to include your first month of ATM. I should be very specific about that. And these 3 live training classes. So we will be recording these. They'll be starting on Tuesday. We'll do another one on Thursday and then the following Thursday. If you can't make it to those because they're during the day or a bad time, we'll send you the recordings. But you'll have to subscribe to actually get the recordings. And I would recommend that if at all possible, make it into your schedule so that you can attend. Because Rahul is going to be able to do plenty of Q&A. He's going to be able to answer questions, and he's very, very thorough in these classes. We sold a number of these classes. I talked to a number of the customers that had gone through the classes. The feedback was incredible on them. I would recommend that you do this. And it's only, here at the class, it's only $399. That includes the $99 subscription to the RMO ATM 3.0 for your month. And if you just want the class only, it's going to be $299. But if you don't have ATM already, do the $399 package because he's going to be covering a lot of ATM aspects in it. So if you don't have MetaStock already, we'll include a subscription to MetaStock as a trial basis to kind of help you get started. If you don't know a lot about it, MetaStock, maybe you just caught the YouTube video, I'm only going to say a couple things about it. Number one, MetaStock itself has been rated number 1 in its price category every single year for the last 25 years in a row. And there's a reason for that. People love the software. It's helpful for them. They continue to use it, and they continue to vote for us every year. Thank you for those of you that do that. That's the one thing I'll say. The other thing I'll say is it does a great job of giving you crystal clear charts. It helps you scan the market. It helps you get alerts when different things happen on a chart on a real-time basis. It helps explain that to you in English. It's a fantastic product. You should be using it. I wouldn't trade without it. And we'll give that to you free if it's something that works to try out. There's a reason, though. It's been rated number 1 25 years ago in a row. So the bundle package, normally the webinar, normally just the training itself, $597. Normally you'd get ATM on top of that for $149. All of that is available for $399. It's all a one-time cost, except for the ATM is a subscription that goes for $99 every month after that. And you can get it all combined down for $399. If you already have ATM and you just want to go to the class because Rahul's an awesome teacher, I don't blame you. Sign up for the class. It's $299. Okay, so go to order that. Bruesh also wants to know how to sign up for it. Give us a call, 882-3040. If you're international, the best way to get a hold of us is through our sales chat, which is www.metastock.com/saleschat. The other thing I was kind of mentioning to Aristotle in the chat is if you kind of want to see some of these charts on different instruments or time frames, get in touch with us. We're more than happy to send those out to you. So that's what I've got to say. 800-882-3040, metastock.com/saleschat. 3 great lessons, a month of the one of our most popular add-ons, a month of MetaStock if you need it. All of that's available for $3.99. So, and I would recommend you do it. Rahul, I'm bad with names today for some reason. I don't know. Any final thoughts?
Well, I'm glad everyone made it. I think it's a great opportunity. I always look forward to these pro classes. Again, I'm going to be working with actual updated charts and working a little bit into MetaStock and the Power Screener and going beyond the PowerPoint. So it's going to be really interesting. I hope we get a good group together. It's always excellent to give you that practical perspective. But I think great questions. The thing I loved about today was rarely do you get such to the point great questions. So lovely session. Thank you, Jeff. You better go get ready for your anniversary now.
Well, I'll be here for the class. I mean, you've got to have priorities, right, Rahul?
You bet. But,
all right. Cool. Very cool. Well,
thanks again. Thank you, everyone.
I hope to see you guys at the class as well. Again, the phone number is 800-882-3040. Rahul, you are always welcome in the room. And for all of you that came, spend an hour with us during a Thursday workday or even a Thursday evening for those of you that are overseas. Thanks for coming. I hope it was helpful for you. And I look forward to seeing you next week as well.